We actually have said this, and now it's being proven that social media use has peaked in the industrialized world, and we're actually starting to see the decline. So this is what Facebook is going to have to deal with moving forward as people realize how incredibly creepy it is, the amount of intrusive how it's surveillance of its users that have been. So we expect Facebook to have to spend a lot more money. They're going to take in less money because they're limiting a lot of advertising that was very lucrative for them. And they're going to have slowing user growth or no user growth moving forward. So they've got some challenges on the horizon.
Ed, this fall in monthly and daily average users in Europe is frankly pretty astonishing. Do you think it's a one-quarter effect, given all those negative headlines we saw around the March period of time before this quarter began? Or do you think this is, as Ross suggested, a peak in the use of social media in the developed world?
I don't know that I'd go quite as far as Ross went, but I'm definitely sort of in line with him. This is certainly, you know, Europe is hitting a saturation point. I know they've had issues there with Cambridge Analytica. We know that the GDPR is sort of, you know, kind of crimping a little bit of the product. But I think it's more just a function of everyone who wants to be on Facebook is already on Facebook. So there's little room to grow, at least on a subscriber basis or a user basis. What they really need to do is find a way to squeeze in more ad inventory. They actually flagged that even a year ago, that they're running out of ad inventory. That's why Instagram is something they're really pushing hard and doing Instagram stories. And I think that's the story here. I mean, the stock is down a lot largely because even despite the miss, it tends to be priced for a beat, if anything. And the fact that it didn't quite do that even is what's hurting it even more. It's still a growing product. It's still you know, their advertisers is going up.
Before we get too dramatic, they still had an 11% year-on-year increase in daily average users and monthly average users. Yes. They also, the bull case on Facebook is they have all these other levers to pull, whether it's Instagram or some of their other
Instagram and Messenger and all the rest of it. So it is going to be, I mean, even if usage intensity or the number of people using is close to peaking, demand for digital advertising and to reach those eyeballs is not necessarily peak. So in an auction advertising environment, which is what they operate in, pricing should adjust. And, you know, it's not the end of growth. It's a different flavor of growth.
But, Mike, if in the next quarter or two we saw the same thing happen in the U.S. as has happened in Europe, would we see more than a 10% decline?
Yes, then I think then the valuation gets penalized because you have to modify exactly what the long-term growth rate is.
Ross, what were you going to say?
Well, I think you really have to understand Facebook's actually limiting a lot of ads from being placed. Even ads, when I try to boost a CNBC post, they won't do it now because it's a media post. So they're actually, in a way, you know, hurting themselves in this process as they try to rectify the wrongs. So, you know, I think Facebook, and it's a core holding for us, but we've lowered our position in it because of these things, but it's still a core holding for us, and they still have a lot of things potentially going for it. But this is a transition from a fast growth, amazing social company to a very mature, you know, somewhat troubled tech company.
Another thing.
I was just going to bring up headcount. Mike brought it up earlier, 30,275. That was an increase of almost 50% from last year, Ed.
And their costs went up about that much as well. So, I mean, when you're having content that you're having to police now because of all what's been happening with all the scandals, it just costs more. They just need to sort of face up to the fact that they are a media company, and media is an expensive prospect. It's a difficult thing to edit, to look at carefully. We should also look at their Facebook Watch program, which is their version of like mimicking television. It's content they control. It's the kind of video stuff that hopefully lures in big brand advertisers like they go on television. It hasn't really taken off, largely because they don't really have a cogent media strategy. That's where they could, however, get more growth if they figure it out.
Yeah, and I think that's a good point because, you know, as they've moved into more media and television, same with everybody else. And I hear, you know, Facebook is out there in LA looking at projects and stuff, but we haven't seen any cohesive real strategy other than the sort of YouTube throw everything at your users strategy. And we just don't think that that's effective when YouTube is so good.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.